Well, hello and good evening, everybody. We're just opening up the doors here to let everybody in and get settled. So just give us a few quick minutes to get organized, get everybody into the meeting here, and we'll be right with you.
Yeah, we're just loading into here. Let us know when you guys are in. If you can see everything, hear everything, make sure that's all working well. Make sure the chat's working. That's going to be the biggest thing for this whole event tonight is using that chat box. We got quite a bit of stuff to go through tonight. Perfect. Thank you, Paige. Yeah, we got a lot of stuff to go through tonight. We are going to try and wrap this up, the main stuff by about 8 o'clock or just after eight. And then we're going to hang out with you guys for some, covering up any questions that we missed or any other thing you guys want to talk about in the meantime. So, yeah, that's going to be the goal. So there's going to be a lot of information coming at you guys in the next hour. It will be kind of going through at a quicker pace just to keep time up, but the whole time this is being recorded. So once we're done here and all wrapped up, tomorrow I'm going to be sending you guys all an email with the recording. So if you miss something, you want to recap anything, it's all going to be there for you. And if you don't see it by tomorrow or by the weekend, reach out to me and I'll make sure to get it to you guys right away. So yeah, so don't worry if you miss anything. But as Ryan's going to mention too, a lot of times, use the chat as much as you guys can. That's going to be the biggest thing. Ask as many questions as you want. Either myself or Ryan is going to be going through and answering the questions as we flow through this. If we don't get to it, like I mentioned during the presentation, then after we will get to it for you. But yeah, we're gonna give it another minute or so. The other thing I want to mention to you guys too is at any point during this, if you want to talk more specifically one-on-one with us to see what can be done with you in your specific situation, I'm gonna put it in the chat here, but book a call with us. That's gonna be the biggest thing. Ask as many questions as you want, but if you want to talk on a one-on-one level with us to see what can be done in your situation, book a call with us. That blocks off a time where we can have a side chat with you, and I'm happy to help you guys out there. So, yeah. Okay, so we're going, like I said, we're going to be about, we're going to be about an hour into this. We're going to be covering a lot. There is a lot of stuff. Um, there's a lot of stuff to go into buying your first home. So we're obviously not going to cover absolutely everything that goes into buying a home. This is basically going to get you started on what you need to get started, things to avoid, and things that are going to save you money in the at the starting out period. So that's going to be the goal. And so again, I've been letting a lot of people in here. So the people that just came in now, we're going to be doing a quick housekeeping. We're going to get into this, but just use a chat for questions. This is recorded. You'll get a copy of the recording after in case you miss anything. But yeah, we're just after 7, so I'm gonna start getting into this really quick, you guys. So again, I appreciate you guys coming here with us today. Lots of information to cover. So when you guys first signed up, you got the first message, and it says that you will be getting a copy of a free buyer's guide of mine that I'm going to be giving you guys. Plus, you're going to be getting a e-version of my complete guide to buying a home book. I developed this a couple of years ago. Lots of good info on buying a home. This will come in an email with the book, the buyer's guide, as well as a recording of this webinar, so you guys can watch this at any time if you miss anything or miss something important you want to recap. But that's just to say thanks for joining with us. You guys get a copy of that in your email. Like I said, if you don't get it by the weekend, please reach out to me and I'll make sure you do get it. But yeah, thanks again for joining us on your Wednesday evening. So what we're going to cover in this webinar today, like I mentioned, it's not going to be absolutely everything about buying your first home because there's just so much that oh, you guys hear me okay? It's a little, I'm just going to check something really quick to make sure we are okay. Is that easier? You guys hear me a little bit better then? So we're gonna go over all the 6 common mistakes, which is the starting point. So this is what we're gonna cover in this webinar: not getting a pre-approval, not knowing about the new to Canada program, using your bank, not a mortgage broker, buying directly from a builder, skipping a home inspection, and skipping a condo document review if you're buying a condo. Those are 6 common mistakes. It's going to cost you money, cost you headaches, And we're just going to try and teach you guys how to avoid all of that to make it a smooth process to get your foot in the door and all this. So I see that the chat is active, which is great. I'm going to ask you guys another question here. As a first-time buyer, I know there's a lot of information out there. Social media is a bad one. Friends, family, neighbors, things like that. If you guys, let me know if you guys are feeling any of this as a potential first-time home buyer. If you guys are feeling concerned or stressed or not sure of anything, let us know because the goal to the end of this webinar is at least alleviate most of those or give you a lot of answers to help you make an informed decision. I was like that when I bought my first house. Lots of us are. There's just a lot that goes into it. It is a very big purchase. So our job is if you're feeling any of these things, to make you feel at ease about this and that it's very, very doable and yeah, that we're gonna help you through the entire process. So before we get into those six common mistakes that I was talking about, we'll do a little bit of introduction so you know that the people that are talking to you that we are qualified to give you these information and understand who we are and what we do. So first and foremost, my name is Andy Goddard. I'm a realtor here in Saskatoon. I've been a realtor for 5 years. I'm with Realty One Group Dynamic. So yeah, like I said, I've been doing this for 5 years. I have just started a team pretty much for a full year now. We are the ANC team. That's myself in the middle with my partner Connie on the right, and Jessica's a newer agent there. So we're here to help serve you guys in any way with real estate. I actually live in Warman myself. I've been there for just over 10 years now. I've been born and raised in Saskatchewan, but I've called Warman home for 10 years. I got married there. I've had 3 kids here. I love calling this place home. I love calling Saskatchewan home, and so I love helping families call this place home. And I just want to say, like, I service Saskatoon. That's my main hub of business. But I'm licensed in all of Saskatchewan, so I can sell real estate anywhere in Saskatchewan. But I kind of stick towards Saskatoon and the surrounding areas, and I can travel out a little bit if need to. But yeah, that's me in a nutshell. So I'm on the real estate side of things. I'm the one that helps purchase and buy and sell and all that good stuff with the real estate. But when it does come to real estate, especially for first-time buyers, majority of us do not have full funds to purchase a property outright. We are going to need financing. So for the last few years, at least, I have teamed up with one of the best mortgage brokers in the business. He's a really good friend of mine. Ryan's been doing this a long time as well. I'm going to introduce him, but in order for this to work smoothly, you need to have a realtor and you need to have a finance person. And like I said, I haven't found one better than Ryan, so I'm going to let Ryan introduce himself.
Thank you so much, Andy. Yes, I am the yin to his yang. I am the mortgage guy to the to this real estate team. My name is Ryan McEwen. I work with TMG, the mortgage group here, and based out of Saskatoon as well. I am born and raised in Saskatoon. I've been a Saskatoon boy for my whole life. I know the market very, very well here. But as Andy mentioned, we are licensed all the way across the province. So if you happen to find a property, outside of Saskatoon, whether that is maybe in a bedroom community of Warman, Dalmany, Martinsville, something like that, or even something, maybe in Regina or further south or further north, we can help with anything across the province. As we are licensed in all jurisdictions in Saskatchewan. So don't be afraid that just because it's not directly in Saskatoon, we can still help. I am married for an absolutely wonderful 32 years now. I have 2 beautiful boys, and my first grandbaby just came this March, so we're very excited about that. As I mentioned, we know the market here very well. We've been doing this a long time. I've been in the mortgage industry here since the late 90s here in Saskatchewan, and have weathered through a few different changes, some different market conditions, and watching the market kind of ebb and flow and grow here in Saskatoon. One thing you may not have known about the Saskatchewan market, and specifically the Saskatoon market, we are actually one of the top 3 growing markets in Canada. Saskatchewan and Saskatoon specifically is one of the most stable growing economies. So, if you are looking in Saskatoon or the surrounding area, you're in a great, stable, growing market. And what when you buy that home, be very confident in the fact that that property will continue to appreciate and grow. We are looking forward to helping you not only find that beautiful home with Andy on the realtor side, but getting that mortgage all pre-approved and ready to go with the financing on the mortgage side. So a couple of housekeeping items. I just wanted to let most people are already in that chat function and using it, but for the couple that have just joined here late, please use that chat function for any and all questions. We love questions. We want to make sure that we get those answered quickly and efficiently for you. What I do find is please have the courage to ask those questions. Usually, if one person, is wondering that question, there are 5 or 6 other people with that same question in the head. So please be brave and ask away here. The other thing is we are going to continue the Q&A period after. So if you do want to wait till the end, please don't. Please get it into the chat box, but do know that we are going to do a Q&A period at the end as well. The other thing too is every situation that you're going to have that we deal with is really individual to you, your circumstances, where you work, maybe your down payment is a little different or a little unique. Every situation is going to be unique to you. No mortgage is a one size fits all. We want to tailor that mortgage and that property to you specifically. So don't be afraid to click that booking link that Andy has put in there. We want to talk to you one on one. That will get the process started to allow us to connect with you one on one, talk to you a little bit about the mortgage side, talk to you a little bit about what you're looking for in a specific property, and really tailor that down to what needs and wants you have specifically. So I'm going to pass that back over to Andy to get that presentation started and love the questions.
Awesome. Thanks again, Ryan. Appreciate it. Okay, we're going to get into this now. So before I get into those 6 common mistakes like I talked about, I just kind of want to show you guys the steps to home ownership really quick. This is very, very condensed on what this is, right? There's so much that goes into buying a home, but so you guys are aware of what the steps look like. First and foremost, the biggest, most important part about buying your first home is getting a mortgage approval or a pre-approval at least. That's going to be the biggest thing, which I'm going to discuss here right away on why that's the first and most important thing. But that's the first thing we do. We get that pre-approval in place. And then what we do is once we have that number that we know that you can purchase up to, then we start the house hunt. So what we do is we have that conversation with you. We discuss what you're looking for in a property. Do you need a condo? Do you need a townhouse? Do you need a detached house? Do you want something with a suite? Anything like that. And we tailor a search to you to fit within your budget. So then we start touring homes. We get that going. We find the one that we like, and then you write up an offer to purchase. So an offer means we're going to offer something to the seller to buy their property. Now, in this limited market, it is very low inventory, which means it's a little bit more competitive. So negotiations can be a little tougher in this market, but it's not unheard of. So if we do find a property that we can negotiate on, we 100% will, right? So we go back and forth with the sellers to come to an agreement on everything in the offer. Once it's accepted by both sides, that's where you're going to hear it's conditionally sold, which means the property is now conditionally sold to you. You just have to fulfill some conditions to satisfy it, which means it's usually financing. So we now have a property to get the full financing approval on. So it gives Ryan time to do that. Gives us time to do any home inspections and condo reviews that we need to be done. But once we do everything that makes it or that satisfies it for you, the buyer, you have to be okay with everything. Then we remove those conditions, and that's when the house becomes a firm sale and off the market. And at that point, we just wait until possession day, which could be anywhere from a couple weeks to a month to 2 months, depends on each property. But in that time, that's where you finalize your financing with Ryan. You sign at the lawyer to transfer the title into your name. And then on possession day, we meet there with the keys, do a thorough walkthrough of the home, and then make sure all is good as it was. And then you are now officially a homeowner. So again, like I mentioned, very quick, very condensed and generalized version of what goes on. There's a lot that goes on in each one of those steps, but the role that Ryan and I play, because this is our profession, is that we pretty much walk you through everything. We let you know exactly what's going on at every minute and why we're doing why things are happening the way they are and what you need to do. And we pretty much do everything by holding your hand the whole way through. So it's a very smooth process once it gets going, and that's kind of how it is. So um, there's a good question there about pre-approval. I love it. We are going to get into that right away, which brings us to our first mistake. Before I get into that, I just want to remind everybody again, if you want to know more about anything on a one-to-one basis, please book that call with us. That gives us a chance to talk to you specifically one-on-one of your specific needs and what we can help you with. So, okay, first mistake is not getting a pre-approval. Why is this number one? Like I mentioned, getting a pre-approval is the very first step to buying a home because number one, it's going to tell us that, okay, you've already checked into your financing. It shows that you pretty much are able to purchase the property, which is great. This will also give us that maximum amount that you can purchase. Those two things are huge, especially when it is in this low inventory market. Number one, it gives us the maximum amount, so now I know how much you can afford to purchase, and we shop within that range. Also, the second thing it does is when we write an offer for a seller, they're 9 times out of 10 are going to ask, "Are you pre-approved?" And if I say to them, "No, unfortunately, they are not pre-approved," they're not even going to look at you because they have no idea if you're even close to getting an approval or not. If we go to them with that piece of paper that says, "Hey, look, we have a pre-approval from Ryan over at TMG. We are good to go." That is way more confidence in them to accept the offer than if we don't have one. So it just helps us give us another edge on writing an offer as well as the amount that we can purchase. So that's why this is the biggest step. Without this, without having a pre-approval or knowing if you can buy something, it just doesn't work. Um, so yeah, what goes into getting a pre-approval, right? That's going to be the big thing is these three things. Now we call them pillars because, like everything, these three things have to fit together in order for this to work. If one doesn't, essentially the thing falls down. But like Ryan mentioned, this isn't just a one size fits all thing. This isn't exactly how it should be. This is general guidelines to this. This is typically what lenders look for. Everybody's situation is different. So even if you think you might not be ready because of what I talked about, but you kind of want to know more, book that call with us. Let us help you. Let us walk you through your specific. Because trust me, I'm pretty sure whatever your situation is, Ryan and I have run into this at one point or another. So just bear with us on this. So what the three things are is first thing the lenders are gonna look at is credit, right? They want to know if they're gonna lend you a substantial amount of money, how are you with paying that back? Do you have credit cards? Do you pay those off in time? Same with loans or lines of credit. Do you pay those off on time and not missing any payments, not having everything maxed out? You know what I mean? Things like that. So they want to make sure that your credit is good. Your score is also an important factor. So as long as it's around 650 and above, you're good. And as long as you're not, you're not currently in a bankruptcy or debt consolidation, but you've been out of that for quite a while, right? Those are kind of the things they look for is how do you do with debt? Okay, so that's going to be the first thing. The next thing is another obvious one, which is income. They need to know how much do you make, so they can kind of tailor the amount to how much they're not going to do 100% of your income because you would be honestly house poor. They know you need to have extra money for bills and gas and food and all that stuff. So they don't use 100% of your income, but they need to know how much you're guaranteed so they can work with that. So the biggest and the more common way they find that out is if you bring 2 years worth of income tax statements. But of course, there's people that may not have been at the job long enough, or they're new to Canada and haven't been here for 2 years to collect that. There's like the new to Canada program will help for that, which Ryan's going to touch on shortly here. But also another thing that would help is if you have a letter from your employer that states you're guaranteed hours and you're guaranteed this pay, so it kind of guarantees the income. That's what's going to be the most important thing is something to show your wage is guaranteed. If you work at a job that is straight commission based salary, or you're working at a job that's basically your own boss, like you own your own company, or you are kind of self-employed, kind of like Uber, Skip the Dishes, DoorDash, things that you aren't guaranteed pay, those things they can't approve you on unless you've had at least 2 full years of income on that income alone. So those are just some things to think about. Again, everybody's different. Reach out to us if you want to know more about your situation, but that's typically what they look for. Okay. And then the third one that fits this all together is down payment. So the minimum down payment you need to have to purchase a home is 5% of the purchase price. So that can come from a couple different sources. There's about three common ways, plus a fourth way to get a down payment. So number one is obviously your own savings. That's the most common ones. And anybody new to Canada, if you have money saved overseas and you're going to bring it here, Ryan's going to touch on what to do with that and how to get it over here and use it in the shortest amount of time. But your own down payment, your own savings is the most common way. The second way is if you have RRSPs saved up. So basically, you or anybody who is purchasing the property, so you and your spouse, whoever, if everybody has RRSPs, you're able to withdraw up to 65,000 per person to use for a down payment. Now, if that's something you're thinking of doing, please reach out to your RRSP provider to make sure they know that you're going to be doing that. They'll let you know what they need to do and what you need to do because you eventually will have to start paying it back. There's a certain amount you have to pay every year back into it. So what you're doing is basically borrowing money from yourself and you're just paying it back in. So there are stipulations with that. So that's why I say reach out to your RSP provider and find out that. But that is an option as well. The third option is what we call the bank of mom and dad. So you can get a down payment as a gift from an immediate family member. So that would be grandma, grandpa, parents, so mother, father, and brother or sister. So immediate family members is what you can get a gifted down payment from, and they can just write a letter and give you the money and state this is a gift for you, and you can use a down payment that way. Or you can mix those up a bit, your own savings, RSPs, and a gift if you need to. It can all be mixed together. So those are some options. There is a fourth option, but it's very inclusive. So if anybody on here is part of the Métis Society of Saskatchewan, the Métis have a first-time home buyer grant that gives them up to 15,000 for a down payment, plus some of the closing costs is covered. So if anybody here is part of the Métis Society of Saskatchewan and wants to know more about that, reach out. I'll give you some great information and who to talk to about that. And that just works together with everything else for Ryan to do the mortgage with. Okay. So again, those three things have to connect together to make this happen, right? Again, not a one size fits all. If any of your stuff feels you're close to this or you want to know more, like I said, book a call with us, click that booking link. We're happy to go over that with you guys. Okay. All right. The nice thing about pre-approvals is they are underwritten. So they go to the underwriter, they will review your income, your credit, and your down payment source. But the nice thing is they are reliable and it tells us that maximum qualifying amount, which is super important to shop within your budget. Okay. The next and last thing about pre-approvals too, if during the pre-approval process you're talking about how to get it and how you can do with it, and if there becomes an issue where maybe your credit's not so good or your income's not quite there or whatever the case may be, there can be an option to use a co-signer. So that again can be an immediate family member. So mom, dad, brother, sister, grandma, and grandpa, they can co-sign for you. They just have to go on the title of your home, help with signing all the documents to buy the home. They have to also be approved on the mortgage as well. So they do have to have some sort of an income, have to be either a Canadian citizen or permanent resident. But they will be committed to doing that. There are some risks to it, right? So if you don't make your payments for the mortgage, they will come after your cosigner for the payment. So that's some things that you guys would just have to discuss with them about. They will be committed to being a cosigner for you as long as you can't be approved on your own. But once you can be, then you can take them and remove them off the title with a lawyer, but there is an extra cost to do that. So when you purchase a property with a cosigner, there's no extra fees. It's just the same as anything else. It's when you go to take them off the title, you have to pay a lawyer to remove them, and it's roughly about an $800 charge to do so. So a lot of people just choose to let it go, and when they sell the property and go to buy another one, then that's when everybody gets removed off the title and you're all good there. So that is another option. Again, that's something that Ryan can bring up to you during the pre-approval process, though. Okay, so again, something for everybody to talk about if needed. So, all right. So yeah, talking about the pre-approval, that's essentially the basics of it. But I'm going to let Ryan take over for a little bit. He's going to discuss the new to Canada program. So for anybody who's new to Canada, this program is going to help you guys kind of get an approval quicker by establishing credit and things quicker. It does not change anything like how much your interest rate is or anything like that. It's just to help establish more of a base guideline for your credit and stuff like that. So Ryan's going to take that over for us.
Yeah, thanks so much, Andy. So yeah, as Andy mentioned, this is not a program that has a rate premium or qualifies, substantially different than a regular borrower in Canada. realistically, one of the biggest segments of the first-time homebuyer market in Canada and in Saskatchewan specifically is that new to Canada market. Now, in Canada, we typically immigrate over 1 million people into the country each year, sometimes more, sometimes slightly less, but kind of right in that million person range. So you can see 1 million people influxing into the Canadian market. They're not going to have the pillars, as Andy discussed, that maybe the income is going to be fairly brand new. You're not going to have a lot of established Canadian credit yet, and maybe the down payment is from a different source. So the government of Canada and the mortgage industry really got together with our lenders and said we need to come up with a program that really fits the new immigrants coming into Canada and find a way to get them into housing sooner. So they developed what was called the New to Canada program, and we'll cover that a little bit. So really, I want to talk a little bit about the three pillars that Andy had mentioned: the income, the credit, and the down payment, and how those relate to the New to Canada program and allow somebody that's maybe fairly new to Canada to get into a mortgage and qualify underneath those different pillars. So the first one we'll look at is the income, of course. So what does a new to Canada borrower really look like? What does that mean? So these are typically people that have immigrated into Canada fairly recently, within the last 60 months or 5 years. Now, the reason they kind of set that 60-month mark is that that's kind of the amount of time that it would take you to fully establish maybe your income, your down payment, should you kind of go just be a normal borrower. So really, it's really people under that. Anybody that's been here 5 years or longer, you're going to have stable job. You're going to have your down payment all ready to go, and you're going to have some Canadian credit already established. So these are for people that are within that kind of newer than that 5 year mark. Now, this program is specifically designed for a couple of different segments. Number one, the permanent residency program. So people that are here on a PR program, this is designed specifically for you. Anybody here on a permanent residency program, yes, this automatically would qualify you as a new to Canada borrower. But the other one that people may not realize is that anybody here on a valid work permit as well also qualifies underneath the new to Canada program, as long as there is a minimum of 183 days as of your possession date left on that work permit. You also qualify underneath the New to Canada program. The one caveat to it that I will kind of cover that I do get asked about a lot is people that are here on a student visa. So if you're coming to Canada to study at the university or in school, unfortunately, those programs do not qualify underneath the New to Canada program. What we find is that most people coming here on student visas do return to their country of origin fairly quickly. About 80 to 90% go back to their country of origin. If you go, you can actually transfer from a student visa into a work permit. That is okay. And once you get that work permit, that qualifies you immediately, but the student visa by itself, unfortunately, does not. Okay, so let's talk about the income stuff. So typically, what we notice is that most people coming into Canada, they do find jobs fairly quickly. They usually come with a little bit of money to kind of handle them through the first few months, but they do find income quite quickly. Now, as Andy mentioned, one of the biggest things that we look for is guaranteed income, some consistency, and some longevity to that income. So when we're talking from a mortgage lender or a bank perspective, what they really look at is something that they can sink their teeth that there's some stability and some longevity to that income. So number one, if you come in here and you have guaranteed hours at work or you're on a guaranteed salary, fantastic. Those work great right out of the gate. So as long as it is a permanent full-time position that you have guaranteed hours or a guaranteed salary, all we need from you is a job letter that states, that you're permanent full time, how long you've been there, what position you hold, and that you are guaranteed either a certain amount of hours or a structured salary. We need one pay stub to correspond with that job letter, and we can get you a mortgage pretty quickly. Okay. if you happen to be here, lots of new immigrants do come in and they start on contracts. So if you're coming in and there are maybe a temporary contract job that you're starting, it's maybe a 3 or 6 or 1 year terms. We can do those. What the lenders typically want to see with any sort of a contract or expiring term is that you have that renewed at least one time. So if you come in and you have a 6 month term and you go through that 6 month term and then you get another 1 year contract, we can typically do it on round number two. So as long as that contract or term has been renewed at least once, we can usually do that contract stuff as well. Okay. Now, the one that's a little bit tougher, as Andy mentioned, is people that are on any sort of a fluctuating income. If you are like a fully commission base, if you work a lot of overtime that fluctuates, the overtime portion would be considered variable. If you are business for self and you own your own company, if you're a DoorDash or an Uber, a Skip the Dishes, those are considered self-employed because that income does fluctuate and it is dependent on your style of business and how much work you put into it. The bank typically likes to see a little bit of longevity before they will consider that income. So, as Andy mentioned, usually with those styles of variable income, fluctuating income, or self employed, they do want to see 2 full years of your tax returns, your T1 generals, and your notices of assessment showing that you have that stable and guaranteed business for self income. So that's really the only big caveat is the term stuff, the contract stuff. And if you are self-employed or on a fluctuating income, they want to see a 2 year history of that. Okay. Other than that, most of the incomes, even for new to Canada borrowers, are looked at just like a normal Canadian borrower. Okay. And one of the big things I do get asked quite a bit is things like maybe somebody coming overseas, but they're coming over, maybe they came over before their spouse and something like that. So I get asked a lot, hey Ryan, I'm over in Canada and I'm working full time and I have a guaranteed salary, but my spouse is still in our country of origin. Are we able to use their income to help qualify on the mortgage? He's probably going to be coming over in a year or two. Unfortunately, we cannot use any income that is out of Canada unless it has a 2 year track record of being claimed on your Canadian income tax. So most new immigrants are not going to have that. So watch if you're looking at your spouse staying in their country of origin, we won't be able to use their income to help you qualify. So it's really the borrowers that are new to Canada that are in the country that we can use the income for. Okay, now moving on, pillar number two is the credit. And I'll kind of talk about the credit and the down payment. For the New to Canada program, they kind of work together. So the credit itself, the credit requirement for the New to Canada program really works hand in hand with the down payment that we are going to put down. So for credit requirements, as mentioned, the New to Canada program absolutely takes into account the fact that most people coming into Canada are not going to have Canadian credit established. Usually that is going to take a little while to get that done. Most lenders like to see at least 2 years worth of established credit handled well before they want to lend mortgage funds out. Now, of course, we want to make sure that we can try and get you into a mortgage quicker than that 2 year mark. So what we've really got is two different tiers that we think are going to work really, really well for you coming into the country. Now, the minimum number before we can usually get a credit established, unless you are from a country like the US or the UK, where we can pull a United States or a Great Britain credit bureau, most other countries are not going to have the ability for us to pull a credit bureau and get that credit. So what they like to see is about at least 6 months. And if you have at least 10% down payment and 6 months worth of bank statements showing that your primary bank account is handled well, that's tier number one. So if you've been in Canada for under 12 months, that's that 6 to 12 months mark. As long as you have a 10% down payment and you can show 6 months worth of bank statements that are well handled, that's no missed payments, no NSFs, things like that, watching your balance, making sure that stays positive. As long as that bank account is handled well for 6 months, that qualifies you as Canadian credit to go forward with a mortgage. Okay. Now, tier number two, if you have been here for 12 months or over, you can actually get the normal low down payment of 5% that is normal for all borrowers here in Canada. So if you're here over that 12-month mark, you can use as little as 5% down payment. And what we require on the credit side for that is you have to show 12 months worth of rental payment history. So we're going to get a letter from your landlord stating that your rental payments have been made on time for 12 months. And we're going to get 12 months of any structured payment that you have that shows that you have made that payment consecutively for 12 months. Now, what I mean by structured payment, that can be any utility. So a Sask power bill or a Sask energy bill, Shaw Cable if you have cable at your rental, if you have a cell phone, your cell phone bill through SaskTel. If you have a car and you have plates on your vehicle, you're showing your plates have been made on time for 12 months. Any structured payment that shows well that you've made that payment for 12 months in combination with 12 months of your rental payment history and a 5% down payment, and you are good to go on the credit side for the New to Canada program. So even if you don't have a credit card or a line of credit or a loan, there are still lots of ways that we can show that you are a good credit risk underneath the New to Canada program through different things like bank statements or structured bills. Okay. Now, pillar number three, of course, as I mentioned, really does kind of work hand in hand with the credit side is that down payment portion. Okay, so again, if you've been here less than 12 months, that 6 to 12-month window, we do need you to have at least 10% down payment that goes together with the 6 months bank statements. And if you have been in Canada for 12 months or longer, you are able to go with the minimum down payment of 5%. We just need the 12 months worth of rental payment history and the 12 months worth of a utility to go with that 5% down payment. Okay. Now, down payment, as Andy mentioned, I will kind of touch on this again. There are some different sources that we can use. Of course, the easiest being, if you've got money in a savings account, what the bank typically looks at is a 3-month track record of that down payment saved. So they'll look at a 3-month worth of bank statements to show that that money has been in your savings for 3 months and that it has not been borrowed or anything like that that we need to focus on. So as long as you keep, putting money, when you get paid, you move the money from your normal daily account into a savings account, something like that. They're going to look at that 3 months worth of bank statements and say, yep, the money's been in here for the 90-day period. You're good to go. Okay, now the other options that we do have, as Andy mentioned, the bank of mom and dad. So if you get a gift from an immediate family member, that also qualifies as a normal down payment here in Canada. What we need is we'll get you and your family member to sign a gift letter stating that the funds are a gift that is non-repayable, and we'll show those funds deposited into your savings account, and that works great. Again, please note that they do have to come from an immediate family member. So mother, father, grandparent, child is really kind of what we're looking at. Legal guardians do kind of fit in there as well, but it does have to be an immediate family member. It can't be a friend from back home. It can't be an uncle. It can't be a boss or anything like that. So know that it does have to come from an immediate family member. The other, of course, being that RSPs. You can borrow money up to $60,000 out of your RSP account if you do have that much in there. Now, the way that RSP work is that typically, if you're not using it for a mortgage, if you withdraw funds out of your RSP account, you do have to pay tax on those at 30%. Underneath the first home buyers plan, you can withdraw up to $60,000 of those RSPs tax free. The only caveat to doing that is there is the limit. $60,000 is the max you can borrow out, but you also have to pay that back, and it's a 15-year repayment cycle. So if you borrow $15,000 out of your RSPs, you have to pay at least $1,000 back in every year for 15 years to replenish that RSP account and keep it in that tax-free status. But that is an option for you as well. So if you do have RSPs that you want to pull out for down payment, talk to me. We'll go through it. We'll make sure that we connect with your RSP provider and get that all locked in for you as well. So as you can see, some absolutely fantastic options that even if you are fairly new to the country, 6 months to up to 5 years, that we can get you into a home quite quickly. Most people think that they have to be in the country for 2 or 3 years to qualify for a mortgage, and that's just not the case. Andy and I do a ton of new to Canada friends each year. We are very well versed in this program, and we would love to help you out if that is your circumstance. Again, please click the booking link. Each circumstance is going to be different. We would love to talk to you specifically and see what we can do to help. I will
Awesome.
pass it back over to Andy here to continue on. And if you do have any questions on the New to Canada program, just let me know in that chat box.
Awesome. Thanks for all that info, Ryan. It's good stuff. Yeah, we've helped many new to people from new to Canada help buy property. So we're gonna move on here. We're on a good pace here, which is good. For anybody who's joined recently, we're just going over a lot of stuff here. We're just going on a little bit more with with some of the financing stuff. Then we're gonna jump into a little bit of real estate stuff. But again, this has been recorded, so if you've missed anything, there will be a recording sent to your email by tomorrow or by the weekend at the latest. So yeah, we're gonna move on again. Book or click that booking link if you want to talk to us one on one and see about your personal situation, and then we'll go from there. But yeah, the other mistake is using your bank. Now, actually, Ryan and I were having this conversation just before we got on to here. Is that like everybody uses a bank for different reasons. Most of the time, it's for your check-ins and savings accounts, some investments, things like that. But I don't recommend using it for your mortgage. Now, I've had lots of people come up and say, "Well, I've been using the same bank for 30 years, and they've done us really, really well." And then a lot of times when they go to use them for a mortgage, it's not treated very well. They're slow. They take forever to get stuff done. There's very lack of communication a lot of times. It's actually quite stressful to deal with them at most points. So the reason why Ryan and I have met years ago and have done this is about the customer service aspect of it and to also save you money, which is key, and I'll get into that. So don't come into this thinking that I'm bashing all the banks and they're terrible. I've worked with some great mortgage brokers at the banks, but most of the time using the banks is slow and it's a headache. So and so this is why, right? The reason why I use Ryan for everything is he has access to 30 different lenders' products, okay? So when you're shopping around for things, just like everything, shopping for a car, shopping for a house, shopping for anything, you want to have options to see what's going to be the best fit for you. That's what Ryan's going to do too. He's going to take your situation and your finances, he's going to shop around to different lenders to find the right fit for you. So not only the best interest rate for you, which saves you money, but also the best product that's going to allow you to pay off your mortgage quicker without any penalties and flexibility to do a lot of things with it. So that's the key thing. If you walk into the bank, whether it's Scotiabank, CIBC, RBC, whatever it is, they're going to restrict it to their own product, and that's it. That's what you get. So why not have the options, and why not have somebody looking for the right option for you, right? So you takes all the legwork off of you. Ryan works the same hours as I do, so as a realtor, everybody knows real estate is pretty much well, I don't want to say 24/7, but it's evenings, it's weekends, it's after hours, right? Because that's when most people are off work, right? So if we're in a live offer situation where I need a question answered quickly at like 7 o'clock at night because we are competing offers, I can text Ryan and say, "Hey, can we do this?" And 9 times out of 10, he's going to answer me right away, or he's going to give a few minutes and then he'll be back to me. But if I try to get somebody at the bank at 7 o'clock at night, I usually get a recording saying, "We're going to get it back to you in a business day," which is way too late. And it's happened many times. So he works the same hours as I do. When we need stuff, we get stuff. The bank, of course, works their bank hours. So the other thing is Ryan is he's going to offer you the best mortgage rate up front. That's the key. A lot of people shop for mortgage rates. Ryan's going to give you the best option up front. Banks typically give you their bank posted rates, which can be higher and needs to be negotiated down. Lots of people don't like to do that negotiation or even know to do that. So why worry about it when, again, Ryan can do that for you? He'll just give you the best rate and say, "Here you go." Right? Ryan works for you and your best interests. right? He's not, mortgage brokers don't work for a bank, right? They don't work for a lender. They work independently and for you. Whereas again, the employee at the bank is an employee of the bank. So they have to also make sure you're okay, but also their employee and can be a conflict there, right? So let's just avoid that all. And as I mentioned, you can call or text anytime. And when I say anytime, I mean within reason. Please don't message at, 11 o'clock, 12 o'clock, midnight, you know what I mean, at night. But anytime, after hours when it's reasonable, then you're good. And again, banks are just typically hard to get a hold of, and they take all the way to the very, very, very end, and it's just a harder process. So let's just eliminate that. Let's save you money on interest rates. Let's save you money on penalties because that's also a thing too. So when you get a mortgage, it is 25 to 30-year mortgage is the maximum, right? So you have up to that long to pay it off. If you decide you are going to move, whether you're going to downgrade, you're going to upgrade, you're going to move to a different city, province, country, whatever, because you have a change of life, we don't want you to be penalized for that. So what happens is when you break your mortgage, let's say you sell your property in 5 or 10 years instead of paying it all out, there is a penalty for that because you're breaking your mortgage. Now, chances are with Ryan, it's going to be little to none. We can't guarantee there's going to be no payout penalties, but bank payout penalties can be higher. So again, we're here to get you cheaper interest rates. We're here to give you less bank penalties when you break your mortgage if you need to, and all around save you money and headaches and give you the best customer service that you can get compared to going to the bank. So again, not bashing banks. They are very, very good for a lot of things, but when it comes to a mortgage, get that customer service, use a proper one, and use ones that we know can close deals amazingly instead of ones that give you headaches the whole way through. Because you're already going to be under enough stress buying a property. We don't need the mortgage side of things and the person helping you with your mortgage to add to that stress. Okay, so that's the main thing. So yeah, there are people that have just jumped in. We've been over a lot of the financing stuff. Again, this is recorded. You guys will get a copy of it to recap of it. But ask as many questions in here. We'll get to it at the very end here. I've got about 15 minutes and I'm going to wrap up some short real estate stuff just because this financing is your first step. And so I want to get that out of the way first so you guys understand where it needs to get the financing started. Now, some just couple tidbits during the buying process. It's not everything, it's just some things to, again, to save you money and headaches. Um, and for anybody that just jumped on too, I'm going to put this in here. If you want to talk to us, Ryan or myself, one-on-one, about any of your situations, to talk about your finances, what you need to do to get pre-approved, or real estate in general, book a call with us. That sets aside a time for us to talk on one-on-one. So, okay, mistake number 4 is buying directly from a builder. Now, I've had lots of people, and it's kind of a generalized idea that people think if they go directly to the source, that they're going to get a better deal, which is in fact not true. Going directly to a builder is not going to save you any money. Their prices are already built, and they've already have it established of what their price is. You're not going to get a deal with them. And so the reason why it's more important to take, myself as a realtor there is because number one, I know who the good builders are. I know who the not good builders are, the ones to avoid, the ones that you should use, the ones that offer good stuff, what they offer, what they can offer. And I may not, most of the time, like 9.5 times out of 10, they do not touch purchase price. They have a set build price, and that's what it is. That is what the purchase price is. What I can negotiate for you, though, is add-ons, because not a lot of new builds come with everything, right? You may not come with appliances. There might not be an air conditioner or a deck or, landscaping or a driveway or whatever the case may be. I can negotiate those things in, right? If not all of them and not for free, don't get me wrong. I try to, but I could potentially get you a no cost appliance set, or I could get you an appliance set and an air conditioner at half the cost. So you're kind of getting one for free. You buy one, get one free kind of thing. There's a bunch of different ways we can negotiate different add-ons in that's going to save you money instead of you outright going to find it yourself. Okay. And without somebody to help you with that, you might not know to add that into it. Where I already know that, hey, we got to add this to it. I'm going to try to add this on for it, right? The other thing is, um, there's a lot that goes into a new build. There's steps to it, there's a process to it. And if you've never bought a home before, chances are you're not 100% knowing what you're looking for. I've been into thousands of homes. I've owned my own homes. I have a great understanding of the workings of it. but I've been through enough of these new builds to know what to watch for, especially when they do what's called a pre-possession walkthrough. So when you buy a new build, when it's about a week before the possession date, we walk through that new build with the builder and we look everywhere in the house and we actually take tape and we start marking different areas in the house of blemishes, things that need to be fixed. But I'm there with you to have that second set of eyes instead of just you looking blindly with the builder. I make sure to dig into places that I know that are prone to, miss things or hide things. Trust me, just because it's a brand new house doesn't mean they don't miss anything. There's been lots of things that we've uncovered that we need them to fix, and it's under warranty and they are very good at fixing it. But if you don't know to look for it, you might not know until it's too late, right? And trust me, there's been lots of things missed. I also highly recommend a home inspection for a brand new home too. Okay. It doesn't, just because it's brand new doesn't mean there's things that aren't right with it. And trust me, we have found things on a home inspection for a new build as well. So that's just a thing. I may not be able to save you a lot of money buying the house, but I will save you money in add-ons and headaches and things that could be missed, that could be a potential problem in the future. Okay. All right. One thing I really like to talk about is home inspections. They are probably next to the financing, a home inspection is probably the most important piece of information you'll get for a house. Just because we're a little lack on time, I usually ask this, but if you guys want to know, a home inspection typically costs about $500. Okay, that's about the going rate these days. I've had people say, well, that seems like quite expensive, but honestly, number one, the work that goes into doing a home inspection is a key thing. But the information that you get is worth way more than $500, especially when you're buying a three, four, five, six, $700,000 house. It's nothing compared to what is found in here. The inspector takes at least 3 hours to go through everything, and they check everything from top to bottom. The only thing they cannot look at is they can't be invasive. So they cannot cut holes into a wall to look behind there. They can only see what they can visually see. They can open things up like electrical panels and appliances and stuff like that, but they just can't, literally break something open to look into it. So they have tools for that. But this is what's kind of covered in it. And I tell people to get a home inspection, no matter if you've owned 20 homes or it's a brand new one or old, always, always, always get one. Okay. So this is what they do. They have what's called a thermal imaging camera as well as a moisture meter detector. So what they do is they go around, they check all the insulation in the house to make sure it's there. There's no heat loss. There's nothing being extra heated or anything like that. So they check to make sure that's good. They check to make sure there's no moisture detected inside the walls or foundation or has been recently or anything like that. They'll check your electrical. And when I say they check your electrical, it's everything, your electrical panel and every single plug in every single room they'll check to make sure there's no sparks, no chances for a fire, things like that. They'll check every piece of plumbing in the house because they want to make sure nothing's leaking. And of course, in Saskatchewan and in Canada, we get to, minus 30 in the winter and plus 30 in the summer. So we want to make sure that furnace, which is one of the most important pieces of the house, is running properly. Make sure that thing's running good and it's all in good shape. They'll test all the appliances and they'll go up on the roof. They'll check the foundation. They'll check the garage. They'll check the attic. And they'll check everything to make sure it's all functioning properly and things that are major or minor are noted in there. Most of the time, you're going to get things that are noted that are more of a maintenance item, like it's not wrong. It's just something new to take care of, or minor fixes, like maybe there is an outlet in a bedroom that isn't working. Those are usually a $5 fix, right? What we're looking for is major things: roof leaks, foundation leaks, um, electrical issues, furnace issues, things like that. And so what happens when we find those things is there's three options that can happen. Number one is we can negotiate them to fix it before you move in, so it's properly done. Number two, we can negotiate some of the purchase price so that they don't touch it. When you move in, we'll knock that off the purchase price and you can fix it when you get in. Or if it's very major or you're just not comfortable at all with it, you can simply walk away and we go find a different house. So that is there to protect you as a buyer. So that $500 is worth every penny to know exactly what's going on with your property. If you skip that and say, I don't need one, even if it's a new build, if the roof ends up leaking or the foundation is cracked and leaking, it can cost tens of thousands of dollars that you had no idea was even an issue until it's too late. So don't ever, ever skip a home inspection. That is one of the most important things to buying a home. Okay. And then lastly, just to wrap this little bit up on my end, is skipping a condo document review. So when you buy a condo, whether it's an apartment condo, townhouse, and some actual detached houses are part of condo corporations, if it's attached to a condo corporation, it's going to have what's called an estoppel package. And that is the condo document that has everything about the condo. It has how much money it has in the reserve fund, and the reserve fund is how much money they have saved up to do any fixes. The maintenance fund, so the maintenance for outside and things like that, snow removal, lawn care, and all that has a maintenance fund. Tells you how much the condo fees are and how much of the condo fees go to certain things. It tells you what the bylaws are, so things that you can and can't do on your property. And it just the list goes on. Who has the insurance for it and what's been fixed, what needs to be fixed. It has the minutes of the annual meeting so you can know what's going on with the condo and just goes on and on. So why this is very important to review is because number one, we want to know how much is in that reserve fund. Is it healthy? Is there lots in there? Because if there is, if there's anything that needs to be fixed, they've got the money to take care of it. All good. If there isn't enough money in there and it's a pretty poorly run condo with a bad reserve fund, what happens is if an issue comes up in the condo, say the roof needs to be replaced or the boiler needs to be replaced and there's no money, they come to each unit owner and ask for more money. It's called a cash call. So on top of your condo fees, you're also paying another chunk of money to help fix the place, which could be anywhere from a couple $100 to a couple $1,000. So we want to make sure that that the condo has been run properly, it's been audited, it has the right reserve fund studies done, and that way you're not going to be caught into something that's not going to be good. So the thing with condos and estoppel packages is as a realtor, I'm not qualified to review these on your behalf. That is what lawyers are for. You will have to pay a lawyer to close the transaction, to purchase or the sale. So we're just going to find a lawyer and we're going to get them to review this for you. This is a condition to buy the property as well. So if anything is found in there that isn't acceptable for you or you don't like it, we walk away from it. We go find a different place. Okay, the lawyer can review that. They don't typically charge you to review this as long as you use them to finalize the sale, but it's very, very important. So you will save money by getting this reviewed, especially if there's bylaws in place for renovations. There are some units out there, typically apartment style condos, that they don't allow you specific flooring in the main living area. So they may only say you can only put carpet here because it's a sound barrier for the floor beneath you or the unit beneath you. So if you rip out that flooring and decide to put laminate or hardwood floor down and somebody complains and you're caught, they will fine you and you'll also have to remove it and redo that reno as you did. So it will cost you more money. So things like that are very important to review that. And again, it is mandatory that they give you a copy of it. And it's just, let's get a lawyer to review that. Now, all that stuff, don't let me scare you from buying a condo. I've, Ryan and I have helped many first-time buyers buy condos because they are a very good property to purchase, especially for starting out, right? They're usually lower cost, less maintenance on your end. A lot of the maintenance is covered for you, right? So it is a very good option, but we just want to make sure whatever you're purchasing, whether it's a detached house or a condo, that you're protected as a buyer. It's not going to cost you money in the long run or any crazy amounts of money up front. So that's what the job is. So yeah, that's kind of what we have for everything. Again, this is all stuff to get started. The buying process isn't everything about it. There's so much that goes into this, but the main things to take away from this is the pre-approval is going to be your biggest hurdle, and then from there, we help with the buying process to make sure that you're covered with home inspections and with new builds and with condo reviews, all that stuff. There's somebody there watching out for you to make sure your investment's protected. So we're hoping by all of this that you guys are feel a little bit better about the process. You're not as anxious about it. You know that there's people there to help you, not just put you into anything. We want to find you the right place for the right price. And so yeah, that's kind of what we got for you guys today. Again, I'll put it in here, the booking link. If you want to know more, whether it's right away or down the road, book a call with us so we can book that time off for you. And it kind of just looks like this. Basically, it'll come up. You just pick a day and time, and it'll block it in there. It instantly goes to our calendar, so then I can for sure know that I have time to talk with you on a one-on-one level. And yeah, we just go from there. And then once we have the first book call, you're free to talk to us about anything. So So yeah, so lots of good stuff. We're kind of at the end here, so this is kind of where we're gonna go through any questions that we may have missed through it, but this is your chance for anybody else. Ask questions on anything, whether it's, what we talked about, the market in general, different questions you have with either mortgages or real estate, and we're happy to sit here for a bit and answer any questions you guys may have. And Ryan, feel free to step back in too now. We'll kind of wrap this all up. Just want to make sure I didn't miss anything either, but we do appreciate you guys all being here, um, and hanging out
Oh,
with us. So yeah.
my fault. I was just coming off a mute. Great question from Chris. Yeah, how will I know what the maximum mortgage amount that I qualify for? Great question, Chris. What we're going to do is we're going to chat with you, have you fill out a little bit of an application form with your information. We're going to analyze that with you, go through those three pillars: your income, your down payment, and your credit. And we go through all that, and then based on the rules that we have for mortgages here in Canada, we're going to let you know exactly what that income and down payment and credit will qualify you for. So we will handle all that for you on our end to let you know exactly what your income lets you buy. You bet.
Yeah, there's just a note on that too. We've had it lots of times where somebody's like, well, my friend or this guy got approved for, up to 600,000, right? But every single person is vastly different than everybody else. Even if you work at the same company, the same job, and your coworker makes the exact same amount of money as you and all that, you could still have drastically different pre-approval amounts just based on your debt, everything kind of like that, your debt, your down payment, all those kind of things. So it's not a one size, like we say, one size fits all. It's everybody specific. Anything
Great
else?
question from Eskidar here. Will getting assessed multiple times affect my credit score? This is a bit of a myth, you guys. It's kind of out there that don't get your credit checked because it kills your credit score. That's a bit of a myth. So when the checks are done on your credit, it does affect it very minimally. Again, as Andy mentioned, we typically like to see credit scores within the 640, 650 range. The minimums are actually 600 for CMHC insured mortgages, anything under 20% down payment. So if you have a credit score like in the 750s, don't worry about your credit score. Your credit score is fantastic. A credit check will maybe move that credit score down a point or two. Making your credit card payment at the end of that month will push your credit score right back up. So really don't worry about credit pulls or credit checks affecting your credit score, in a large way. Now, having said that, we aren't going to just pull it and pull it and pull it and pull it. We're going to have a look. We're going to analyze that. If there are some concern areas there, we're probably going to do the credit check just to make sure that we don't have any concern areas that when you do write an offer that don't kind of jump up to bite us. But we're going to have a good conversation with you. If you say, you know what, Ryan, we've had two credit cards. We keep the balance at zero. I just checked my credit score is 600. We may just do a soft check, or we may not do one at all yet until such time as you write an offer. So each situation is different. Or if we do that check and your score is 750 or 780, we don't need to run that multiple times. We would just kind of hold off until you write the offer after that. So again, the credit pulls don't dramatically affect your credit score. Well, we're going to work with you. We're going to kind of check everything out, see when your timeline is. If you say, you know what, Ryan, we're not looking till the spring, we probably won't check your credit quite yet. We'll ask you a few questions on what you have outstanding, build that into the number, and go from there, and maybe pull that in the spring. So we're not just going to go and pull it 8 times. We would never do that. But we'll work with you. We'll chat with you and do our best to make sure we keep that credit score vibrant and growing. Great question.
Uh, Blessing had a great question. Is kind of realtor. So can I help check if there's been waterlog before purchasing a property? So the hard part with that is there is no place to check for that. Basically, what we do is we're relying on the sellers to disclose that, right? Whether they know about it or not, chances are they would have known about it. And so they fill out what's called a property condition disclosure statement when they list a property. And if there has been any water issue before, they are required to notify that or disclose that, and whether it's happened before and what they've done to rectify it. But even if they have or don't know or aren't aware or don't fill out one of those, the home inspection is going to help provide a peace of mind to let you know that if they notice any water has been coming in or notes of water in the past, their tools and what they can use is very helpful in that situation, where they can kind of guide you if there has been issues with it before. And being in a ton of houses all the time, you kind of get to know the smells of if a basement has had water is kind of a lot more mustier. You kind of feel it with the floor and stuff. You get that feel for it, but a home inspection is going to really, really be helpful for that. But unfortunately, unless somebody lets us know, we don't really have a way of knowing.
The home inspectors are great with that as well, you guys. They have some fantastic tools. Like they will go with thermometer readings and check to see the temperature in the attic. They'll check to see the thickness of the insulation. They will look for, if there has been any water damage or seepage. That will often show up on the drywall. They'll look for marks on that. They have moisture testers that they will go and kind of shoot the walls in different spots to make sure that if there are any moisture readings, those do show up. So as Andy mentioned, that's why the home inspection is so important because they will test all the things that maybe our eyes, when we're viewing the home, don't pick up. They will get into the little corners, check underneath the cabinets, check up in the attic. They will check the corners for moisture, things like that. So they kind of look in the places that we pay them to look at that our eyes maybe don't see right out of the gate.
Yeah, 100%. Usually our walkthroughs are anywhere from 10 to a half an hour, give or take, right? So most of the time, we're just looking at the layout of the house, what we think of it, if there are any glaring issues that I can notice for you guys, but you can't see a whole lot in a half an hour. That's why these guys take hours because that's what they're for. That's what they're paid to do is to make sure that everything is working out. And trust me, I've been through hundreds of home inspections, and every home inspection that I've been to, just they kind of are the same, but they're never the same, right? It's the same idea going into it. They'll walk you through everything, but they always find something different in every house, right? And it doesn't matter whether it's new or old, there will be something they find. Like I mentioned, though, the key is it major or is it just a minor maintenance thing? Or is it, sometimes they even just note things like, hey, this vent shouldn't really be venting like this. This isn't the proper way to do it. It works, so you don't need to change it, but maybe in a few years, change it to the proper way, but it's working, so don't worry about it. So that happens lots, but it's, your furnace isn't working. It's not lighting properly. It's not heating properly. The air conditioner is not cooling properly, right? There's detected moisture or mold in the attic. Well, that's a big issue, right? Those are the things we look for. So, very, very important, very, very helpful when it comes to buying a house. But yeah, yeah, if anybody's got any more questions, feel free to throw it out there. But yeah, if not, like I said, book a call with us. We are happy to sit down with you guys one on one, have a discussion with you. It's not a pressure thing. It's not, we don't do credit checks, nothing like that. It's basically just to get an idea of what you guys need, what's something we can help you with. Maybe you just want to see, if you let us know what your situation is, what we think we can do with it, and maybe you're ready to go right now, or maybe, there's Ryan needs to give you a playbook on how to get there quicker, and these are the things you follow to make it as smooth as possible. It doesn't have to be call with us and we're going to get you instantly approved tomorrow and off we go. It's if you just want to see what you need to do and whether today, in a month, months, a year, whatever, we're happy to talk with you about that too.
Absolutely. Yeah, we want to help you whatever stage you're at. I mean, if it's just looking for a little bit of guidance, ask some questions. We're more than willing to share our wisdom, help you through maybe setting stuff up the right way for something in the spring. Or I mean, hey, if you're ready to go and excited to go and get something this fall, we're more than happy to do that as well. But we want to work with you, walk hand in hand with you all the way through the process and help any way that we can.
Yeah. Perfect. Well, if that's the case, though, if there's no more questions on anything, I'll wrap this up here. But again, a reminder of everybody, I will get you guys an email, the recording and buyer's book and guide. I will send that out tomorrow at some point. Check your spam folders. If you don't see it tomorrow, reach out to me on the weekend and I will get it to you directly. But other than that, if there's no more questions, Ryan, thanks again for this. Hope you guys enjoy your Wednesday evening, and we'll talk to you all later.
Have a great night, guys. Enjoy your summer. Look forward to talking to you soon.
See ya.